Hey everybody, Jeff Garber, mortgage expert, and how about a little bit of good news for a change here? September was a bloodbath for the markets, and so far in October, this is the first Monday of trading. We're off to a great start, and I want to explain to you what's going on. A little bit of optimism here, so this is good news. So, what you're looking at is the bond market, more specifically, mortgages that trade in the bond market, and they are called mortgage-backed securities. And the way you read this chart is as price goes down, rate goes up. And as price goes up, like we're starting to see here, rate comes down. So if we go back to September 20th, a couple weeks ago on a Wednesday, that was the day the Federal Reserve hiked short-term rates 3/4 of a point. And they're hiking rates to try to get ahead of inflation because typically rate hikes slow the economy down. And when the economy slows down, inflation will come down with it. Now, typically the bond market will react positively to that, and bond prices will continue to go up like they have on several other Fed rate hikes this year, and rates would come down. But this time, bond market didn't like it so much because of uncertainty from the Federal Reserve and their comments. So you can see it helped out a little bit on the day the Fed hiked, but look what happened the next day, the Thursday after the Fed hike. We had a major sell-off in the bond market. So that's mortgage rates going up a lot. And then it tried to recover Friday, but then Monday was just even more of a bloodbath. So we lost in 3 days. Rates went up significantly. But after that, you can start to see some green candlesticks with some good action in the bond market, followed by some volatility with the red. But if you come into today, and so far we're up 113 points. And the way I like to equate that is imagine if a football team is playing another team and they're actually winning that game 113 to nothing. All right. Yes, that is a major blowout victory that we hardly see. And that's also a major number of improvement that we're seeing in the bond market. I mean, that can improve rates significantly, half a point possibly, depending on the lender and how they're pricing their rate sheet. But the good news here is, and we're early, very, very early in even mentioning this, and I heard this tidbit today, but the bond market was kind of the first market to kind of sell off this year, even before the stock market. So, with that thought in mind, maybe the bond market has bottomed out. All right. And maybe they'll be the first market to start recovering. All right. Still might be a little early to call that, but maybe that's happened. Maybe this big sell off was just the end of the bottom of the bond market here. And because bonds sold off and rates went higher, bonds are now an attractive investment to some. Again, this is not financial advice, but yield or rate is higher on bonds now than they've ever been. And that's attracting investors into the market. And when investors buy bonds, bond price goes up and yield goes down, but they're guaranteed a certain yield for the duration that they bought the bond. So it could be a win-win situation here. End of the day, we want to continue to watch and see that we get some nice green candlesticks and we continue in this trend, because if so, we do have a ways to go to get back to what we had already lost from a couple weeks ago. But look where we are relative to where we were. I mean, rates were in the sevens at the height of this, and now we can safely say they're back in the sixes. So we're hoping this is good news. We're hoping this continues. That'll be a good trend. And if you have any questions at all, just let me know. I will keep you updated. Have a great day.